welcome. Welcome to our webinar. We will start the meeting in maybe 1 minute, give people time to log in. All right, I'll start sharing my screen. All right, perfect. For those of you who do not know me, my name is Tatiana. I'm the CEO and co-founder of Curium. Curium is a compliance, risk and claims specialist. We combine technology and people and knowledge to solve the trickiest problems in the industry. So today, we wanted to give you a little bit of a gathered experience, lived experience, and some of the hacks, how to actually be good at compliance without spending too much money and also not being too paranoid about it. So as usual, we are speaking very, very simple language. If you've got questions, please pop them in the chat. If you've got any feedback, we always appreciate the feedback. So let's get started. All right, we're gonna speak about three topics. One, it's more a reminder of you. We'll just give you a very brief update of where the regulations are at today. And the biggest one, what to expect, what's coming. The second one, we'll spend quite a bit of time on this one, compliance at a glance, how to make it your superpower. And the reason we're speaking about superpowers is because Curium internally did recently an exercise, and we actually decided that our own mission is to give you superpowers and to make compliance yours. And here in this webinar, we've combined a lot of different experiences of what works and what doesn't work and what people do and what we suggest that you could implement and that would work. And finally, this is a little bit blended. Number 2 and number 3 are practical tips. And we wanted to give you kind of live the little bit about how we can help with this. So let's get started. I'm going to keep the pace. So if any questions, pop them in the chat or the Q&A, and then we'll try to either address them as they come if they're relevant and it's working, and if not, we'll address them at the end. All right, so the fun part, the regulatory requirement. I've just kind of, for a reminder, listed the most important regulators. This is not an exhaustive list. So all of these regulators are regulating insurance industry, and everybody operating in the industry must adhere to the rules and the laws that these regulators are creating. So the most notable one is ASIC. This is the one that gives you your financial services license, and that applies to anyone. Every insurer, every agency, every broker, and a lot of suppliers must have licenses. And a lot of people also operate under someone else's license. That's the authorized representative arrangement. APRA is the regulator that regulates primarily large insurers in Australia. However, recent changes to APRA standards will have direct impact to other businesses that are not directly regulated by APRA. CPS 230 is the most notable example of those. ACCC ensures compliance with Australian competition and fair trade laws. You know that. The Office of the Australian Information Commissioner. This literally, all privacy rules and the Privacy Act applies to everyone. And we expect changes in that one. We've been kind of expecting them for a while, and they haven't happened, but I'm pretty sure they will happen soon. AFCA, again, must be very, very relevant for you, because if customers are not happy, that's effectively their go-to when it comes to complaints. And AUSTRAC. I think AUSTRAC's being left out quite a bit, but just to remind you that the moment you touch the money, primarily you pay the money or you engage someone to deliver a service for you, all the anti-money laundering and anti-terrorism rules apply to you. So have you paid the amount to the somebody who's on the sanctions list and things like that? So, and these would be the examples of laws on the right-hand side, depending on the type of license and the activity that you're performing in the market. Some parts of them will apply to you. This is just a summary of what has been changing and what we are expecting will be changing. So as I said, so consumer data rights, it's already been implemented in the banking sector, what that effectively means, I don't know if you've heard about the term open data. So consumers controlling their data and organizations creating infrastructure and security inside to process customer data. Sustainability and climate risk reporting, that has already happened. So the law is already in effect. So all Australian entities will have to start reporting on their carbon emission and footprints. The larger entities will have to start doing so next year. Smaller entities have a bit of a time spent to get ready for that, but that already happened. Financial accountability regime and CPS 230, I'd put them together in kind of the same bucket. These both are APRA rules, and they apply primarily to large insurers. However, as I said, there are exceptions and scenarios where they would apply to agencies, brokers, and suppliers. And finally, General Insurance Code of Conduct and Broker Code are both being under review right now. So the General Insurance Code is under review as planned, and the Broker Code, and I don't know if you've been following it, is under review based on the triggered explosive Four Corners interview. So both of these are currently being reviewed and will be changed. We've put together a little I don't know what you call it, cheat sheet of how do you prepare for a change like this. And I know that a lot of people will have, well, big insurers will have their own processes. Smaller players or anyone who's not a big insurer, in our experience, don't have processes at all. And a lot of the times, at least in our kind of perception, changes get people sometimes by surprise. If you don't mind, we have prepared a very kind of short poll on this. And if you could just tell us, how do you feel about how ready are you for the changes in regulations? If you just click one of the options, I don't know if you can see it, but I'll walk you through the examples that what's coming. So until now, nobody has responded that they're very confident. And the majority of people has responded that they're okay getting along. And almost 30%, 29% of people are saying, actually, I'm not at all confident that I know what's happening. All right, I'll give you another 30 seconds. So the consensus is it's somewhere between okay and really not okay, with probably the minority being somewhat confident. In the webinar later, I'll speak to that. We kind of expected that this probably likely to happen, this result. So I will address that, how to help you to get more confident. Just before we go there, very quickly. So when something changes, when the new law or rule or regulation is coming out, the questions that you should be asking yourself are the following. First, does it even apply to me? That's a very, very important one. The easiest proxy answer, if let's say you're a subscriber to either of the codes and there's a change in the code, then the answer is clearly yes. If it's these kind of borderline cases with CPS 230 or FAR, Financial Accountability Regime, it's a bit more tricky. You actually need to understand a bit more in detail. If it's ASIC, then probably it's a yes, independent on who you are. But kind of these are just the proxy answers. Don't quote me on those. Then if it impacts me, okay, so what does it mean in terms of change compared to where I am today? So is it something totally new? Is it something that I have to kind of start from scratch? Or is it something that I already have in place and it's just an enhancement? I'll give you an example. When ASIC rolled out complaints regulation in 2021, that was a very painful process for a lot of people because ASIC rolled out it in multiple years and multiple steps. And even though everybody knew what a complaint was and everybody was managing and capturing them in one way or another, but effectively every year you had to go through a change and an adjustment to that process all the time. Then, for example, CPS 230 for agencies is going to be pretty big because a lot of things that are captured in that standard are not necessarily the regular practice today. For brokers, it's going to be even bigger because those brokers who fall under it will have a lot of work to do that has not been done before. So that's kind of assessing how big is the change compared to today. Next one is tricky, and I know that many people don't actually answer that well. What areas of my business are affected? So what that means is, does it affect my payment process? Does it affect my claims? Does it affect my underwriting practices? Does it affect my customer service? And if yes, how? What does that mean? Okay. Then specific assets. So, and this is a little bit of a system kind of issue. What we see a lot when people kind of get a news about something, they just create a new spreadsheet. But thinking about it, it might actually multiply workload across many, many different departments if you do it that way and don't think about it upfront and don't kind of plan it in the what needs to happen. So any specific report that you need to do, any specific register, any specific, I don't know, list of something, or attestations, or records, how you supervise your suppliers, or different things. Then next one, what's the business strategy for me to embed this in my business? And that's not necessarily a regulation question. It's more, how do I make it part of my everyday? I'll give you a very simple example. Let's say you have monthly all staff meetings or monthly team meetings. Adding one point to the agenda would make it happen. That's as small as change can be, well, while not disrupting, your entire process and business. That's just one example. I'm not saying you can do everything like that, but it's a good practice to think about it in these terms. Then finally, who's in charge of implementation? Whose job is it to make sure that this happens? And well, least but not last, not in terms of timing, how does that affect my critical partnerships? And what I mean was that, unfortunately, we see a lot of kind of cottage industry when it comes to implementation of regulation. And a lot of specifically large insurers introduce those reporting templates. Then one player that's not it is on the receiving end of it, receives 5 different formats of those. Even though there's one rule, one regulation, one requirement, everybody's just reinventing the wheel. So maybe starting a critical conversation with your partners and say, well, can you do this way? Can I do this way? Can we align on something that's, minimizing the effort for both of us, is a really good idea. All right, moving into the second part. So how to make it your superpower. And we'll try to keep things simple. I know compliance is hard, but we'll try to simplify it. First of all, and those who work with us, they know it is our favorite presentation. This is your compliance on the page. Risk and compliance, all processes, everything on the page. So it consists of 2 critical big parts. One big part is all of your formal processes that are at the top. And second part is your culture. Culture meaning people, employees, and customers at the bottom. When we talk about the form, I'm not going to go in detail for that, but formal processes, effectively, you knowing your risks and obligations, you having controls against all of them, you having a good monitoring system in place, looking at them if they work or not, then your management of incident, breaches, and complaints as a result of something went wrong in the obligations and the risks and in your business. And finally, testing and enhancing your whole system. It's effectively a loop. It keeps going kind of on repeat, with you enhancing different bits of the puzzle all the time. In our view, a lot of organizations, they overinvest at the top and underinvest at the bottom. And overinvesting at the top will manifest itself as you have a very big risk and compliance department, and then they kind of do things and you don't even know what they do often. And when it comes to regular people, people picking up the phone, people doing, claims, people doing underwriting, people speaking to customers, they have no idea what is really expected from them. In compliance jargon terms, it's called the first line, those people who are actually running the business, and the others are called the second line, so the risk and compliance people. So culture, in our view, is very much how empowered is the first line. Okay. So a secret, the ultimate secret, is kind of very simple and very complex at the same time. So 3 things which you can address that would make compliance your superpower. And when I say superpower, I mean affordable, I mean easy and effective. Okay, so the superpower means it will actually work without you spending too much time, money, and achieving the outcomes that you want. And these things are really simple again: knowledge, process, and culture. I'll have specific examples against each one of those. So you'll see what we mean with that. So when we say knowledge, what do we mean? First, it's common sense knowledge. Something is wrong. I've paid the wrong amount to a customer. Is clearly a mistake, and you can attribute it to business as usual or to compliance. It doesn't matter, but it's a common sense thing that has to be known to everyone. And one of the biggest mistakes that I see in, especially the larger the company, the more it happens, is frontline staff or anyone who's managing your business, your accounts, your underwriting, your IT, your anything. They're not given enough examples to understand where something goes wrong. Some people are really good, really smart, and can see the big picture and can tell you, but some are not. So that common sense knowledge of what is norm and what is not is really, really critical. Next one is specialist knowledge, obviously. So specialist knowledge is not restricted just to risk and compliance people. It's actually very much part of the critical operations and management of those. I'll give you another example. Releasing a new product as an insurer or as an agency has many, many, many regulatory steps involved in those. And whilst you can rely on risk and compliance people to tell you what they are, but usually it's very much head of product or a person driving that process who needs to understand what needs to be done. So there's an ASIC notification, sign-offs with either your security or with relevant heads of departments and things like that. And part of it, again, is common sense, and another part of it is regulatory requirement. So this is very important to have a broad base of the specialist knowledge, not just focused and concentrated in one person. Next one is very important, again, gets neglected quite a bit: embedded knowledge. So traditionally, let's say last century, and for a lot of people still this century, it's documents. So document everything you can and then hope that somebody will read it. Not always effective. So what we mean with embedded is embedded in, well, okay, documents, you'll always have documents, but also embedded in systems and processes. So if you run certain things or reports or something, certain regulatory and compliance knowledge can be even automated, right? So that you kind of don't let your people make a mistake left or right. The simplest one, what we've done in 2021, we've created this one information collection form for complaints, and then we did not allow people to go left and right, and thus we've complied with ethics straight away. So it's one of these examples that is very simple. And then you kind of eliminate the key person risk through that by having it as part of the system. So no matter who's servicing it or no matter who's running the process, they will still have the same thing. And finally, you're here today clearly because you're looking for some external knowledge. Sources of external knowledge. Your first sources usually should be, and I know it's hard, are regulators, because they are the first kind of drivers of what they want, what they expect, and what changes are coming. Industry associations, and what I mean with that is, for example, the NIBA, so the Broker Association, ICA, UAC, and so on and so forth. There are many different associations who are putting a lot of effort in education, or ANZIP, and so on and so forth. Then newsletters, trainings, consulting services, lawyer services, and so on. Depending, every firm will have their own strategy of where they get their knowledge, and often there's an external component in it. Common mistakes. What can go wrong with knowledge? First, is the quote: "My risk and compliance team are great. They know it all, so I don't have to." It's a very interesting, it's almost abdication of duty. And if it comes, let's say, from somebody who's a managing director or responsible manager, that's really worrisome. And unfortunately, this is where this quote is coming from. But equally worrisome if it comes from, let's say, a head of claims or a head of operations or something like that. As I said, unfortunately, the specialist knowledge has to be slightly broader than just focused within the risk and compliance team. And if you don't have a risk and compliance team, you don't have an excuse not to know things. Next one, overinvestment in documentation and formal processes versus training the staff. I did relate to that in the first kind of compliance at a glance picture, saying this is typically a big organization shortfall. And whilst, you know, all the processes are amazing and you've got all the audits and things like that, your frontline staff is actually not doing the right thing because they have no idea what's expected from them. Here, making all staff training a hostage. So, a hostage to certain things. What we've seen quite a bit is delaying or not kind of making bonus conditional on that. Now, if people are not doing the training and getting the CIP points on time, so not on the 31st of December, that's kind of a sign to you that maybe the training that you're offering is not great. And maybe you should do something about it. But if you run this practice of forcing people to do that, it renders the training ineffective. It means they're actually not doing that, and it doesn't have any sense to it. Next one, over-reliance on external knowledge, and then thus underinvestment in people. I've seen different firms that say, I'm going to bring this guy in and this guy in and this guy in. They'll run everything for me and I'm good and I don't need to do anything, right? Big mistake, because they're not part of your organization. And if something happens, you're on the hook, not them. Using too much legal language and generic terms when you talk to people and when you give them training. And by the way, funnily enough, we give a lot of training, but funnily enough, the most effective training are given by team leaders to their own staff with a little bit of help, maybe how to structure it and so on, but they're really, really effective because the team leaders and the people from your own organization, they actually know how you work and they can translate any rule, any law into everyday examples. We do this as well, but the effectiveness, funnily enough, as I say, comes from kind of your own self-training on this and using specific examples. So let's say, what is an incident and what is a breach? I sent an email to the wrong person. That's what it means when you do this. Or I've added another zero when I paid the client by mistake into the payment. Obviously, that's a simple one. Or I forgot to include another vehicle in their policy or things like that. So make it super specific, super sharp, and kind of short. And finally, this is, well, I don't know if it's finally, the most important one is lack of example from the top. And I know it sounds a bit mundane, but what that really means is I've heard a lot of very senior people saying, oh, I hate compliance. It's all box ticking. Oh, I don't care about it. I've got my teams and whatever, or it's too much or something. It's not a good practice. Even if you believe so, please don't say it out loud. It's kind of detrimental to the whole company culture. All right. 6, the signs that your organization has a good knowledge structure. First, trainings with good examples. Second, high levels of self-reported incidents and complaints versus the stuff that you discover in your audits and formal processes. Third, and this is because we sit on a lot of data, so this is our own data. If you have good knowledge, good compliance culture, 50%, more than 50% of your incidents will not be a breach of a law. It's an important one. Another one, more than 50% of your complaints are resolved on the spot, and that more can go up to 95%, just to give you a sense of it. No business interruption if your risk and compliance person is not there. And unfortunately, this is not the case in the majority of the people we work with. And finally, risk and compliance are standing agenda items in many operational meetings. And not necessarily as risk and compliance, but some other aspect, element of this. Have we made a notification to ASIC, or have we done this and that? The best way. Okay, sorry. Any questions on on knowledge. Oh, yes. Sorry, let me just check quickly. No. All right. In that case, may I just proceed to the next one? And the next one will be processes. So the best way to run risk and compliance processes is to actually make them part of business as usual. So the least they are noticeable and standing apart, the more likely you're going to achieve results that you want. Okay. So, effective, and this is a little bit of an art and a science. Process design is usually a combination of both. But so effective process design means, so the elements of risk and compliance are embedded in your business as usual and understood by people. So they understand the why behind it. They're not questioning the why. I'll give you an example. Everybody's using file audits to cover a lot of different topics, to know how well their people doing, to understand if, let's say in claims, if claims are paid in accordance to the PDS, if general advice is not being provided, and so on and so forth. Making risk and compliance questions part of those, super effective. Very good. Covers probably 40% of your obligations straight away. A lot of brokerages are doing annual practice reviews. Risk and compliance specific questions and checks are absolutely key of those. Another one, key documents, the ones that have to be signed off by various people or regulators. Recently, I spoke to somebody who said one infamous insurer forgot to, or did not intend to, review a PDS with the head of risk and release the PDS to the public. And then they've discovered that they forgot to include a title of the exclusions. So instead of people reading that that's excluded, they thought that that was included. And there was a whole bunch of exclusions. And they had to pay a crazy, crazy fine and obviously a very big remediation cost for just forgetting the word exclusion. This is crazy. And a simple thing like get me another pair of eyes, like the head of risk and compliance, just to read through that, would have saved this whole, mess from happening. And then many, many more examples, like standing agenda on your monthly meetings, having reports that encompass also risk and compliance, not just the business as usual kind of indicators. Next one, processes are simple. I use the word elegant, but it's actually, making something simple is actually really, really hard. And trust me, we know that because we have full-time people who do just that day in and day out. And we always find we can make much more simple than what it is now. So example would be, if you want people to do something like to report, to record, a single sign-on is such a powerful tool. We're just rolling it out ourselves because we've noticed like it would make people's lives so much easier. Simple buttons. Don't make it complex to go find somebody and click through 5 different screens to get to where they need to. Or regular meetings with clear agendas and expectations that people know what they're going into, they know what they're going to get, and they know what they need to prepare for that. Just an example. And finally, automated, obviously. I have to say that. As much automation as possible. And the specific of this one, we believe that risk and compliance specialists are often becoming the bottleneck for the actual process and the efficiency of that. Because if that business is relying on them managing all specific systems, getting all the data, interviewing people, figuring out what's going on by themselves, by running around and trying to gather that, that's never going to be effective. The more automated data gathering, processes, reporting, and so on is happening in the company, the better knowledge they will have and the better they will be able to manage what's going on. And best of all, of course, real life. We're all about real life, so obviously we believe in this. Common mistakes. Okay. common mistakes is risk and compliance related processes live within one little segregated department or one kind of person's responsibility. Next one. There's a really, really big number of specific risk and compliance reports that need to be prepared separately. So that in my previous life, when I had to prepare reports, I was kind of crushed by the number of those. And I would say 70% of those were specific risk and compliance, and that had nothing to do with the whole business. And in our experience is if you blend it all together and automate kind of as much information gathering as possible, this is going to be effective. Next one, significant deviation from original regulation requirements. As I said, this can be a nightmare. If you're reinventing the wheel and adding, seen one company for this complaints regulation, adding instead of something like 18 mandatory fields by ASIC, they went to like 56. I mean, that created such a ripple effect and made them so unresponsive and also breaching quite a few laws on that. It's not funny. The closer and the more true to the original text and original requirement you stay, the higher your chances of actually being successful and effective. Yeah, adding significantly more manual work to people with every change. This is unfortunately a regular practice. When a change comes, you say, you head of claims or you head of something, why don't you do another report from me, or why don't you just add something in? And most of the time it would be fine, but if you went through 2, 3, 4, 5 of those, then they're just not going to do it anymore. Like, it's not going to be effective anymore. Or over-promising, creating documents with very sophisticated frameworks that say, I'm going to do all of that, and then saying, well, you people managers or people on the phones and so on, you're going to do it. It's just not going to work. Fine. The next one, risk and compliance people are not part of your critical business activities. So they're kind of informed at the end of it or something, and they can't be there when things are happening and when you're making critical decisions. That's a bad sign. And yeah, finally, risk and compliance people manually input basic data into systems. This is horrible. So this is one of these bad examples. Before I go, sorry, I think I've noticed a question. Do you have an example of risk and compliance section under the file audits? Short answer, yes, we do. It's not a section, it's more embedded than that. Before I proceed, if I may, could we run another very, very quick poll? It's more a little bit of a reflection of how things are working for you. And again, there's no recording of this one. It's anonymous. So let's just try. Please tell us in your own work, no matter who you are, how many incidents or breaches have you noticed and reported in the last month? Okay, so currently almost half is 1 to 5. So another 20 seconds, more of 1 to 5. Once we're done, I'll tell you what the what the data shows. So on average, or I would say the bare minimum, what we see, and this is very much depending obviously on the type of business, the frequency of your policies and things like that. But what we see is at least 1 per month. That's the normal kind of bare minimum type of thing that you need to be seeing. All right. Finally, culture. Culture is a very tricky thing. As you know, culture is effectively people. So it's their minds and hearts. And do they feel safe, supported, and informed doing something, if I may? I mean, I'm sure there are many definitions of culture. But effectively, the secret to making culture good and effective is it comes from the top. So if people don't see their leaders making certain things and punishing or rewarding certain things, they will not be doing what you want them to do. So if you say something, you should also do what you say yourself. Then see something, say something. We are very, very big on that principle. We encourage full transparency in that regard. And finally, embedded in real-time data. So whatever is happening is actually recorded somewhere. It's not just going into thin air and then you debate he said, she said type of things. So poor compliance culture manifests in extra workload for everyone. That's a fact, and we've measured that quite a bit in terms of how many hours and what things are kind of what is happening and how this creates more work for certain people. So first, signs of poor compliance culture. People are not briefed on what they're expected to do. And then they often get stuff ad hoc, just thrown on their plate at the end of the month. Oh, by the way, do this for me. By the way. Then burden of manual work, it often falls on middle management. So, and it often falls in the relation to oversight. And they would have to go and dig for different data, try to understand why this happened and how it happened that it's happened. It's usually pretty extensive, and it's poor quality of data, and they won't always know the answer to those questions. Managers believe that they're doing a good job if they don't have any breaches or complaints. I hope that this mentality is slowly going away. It's still present, but I would say more in the kind of supplier type space rather than the AFSL regulated entities, which is good. And C-suite executives, operational managers, responsible managers report up to 40% of their times goes into compliance-related work, and that's very different by the type of the job and manager. But what do they do in those 40%? They dig through newsletters and try to understand what regulations are even relevant for them. They try to understand what they need to do. They search for data. They try to understand how are they going to implement it, who's going to do this, where do they get the data, and things like that. There's a lot of digging for data in this. Next one, common blind spots. We've tested this one. It's the picture of a naked king, and this is our little joke on the first line of defense, meaning regular people in the business. Most managers say, my people are so good, they know everything. And then you ask the people, what is a breach? Well, give me an example. And 9 out of 10 times they can't. so 9 out of 10 times they don't know what it is. Not because they don't know how to do their job, but because they don't know the laws and nobody gave them really good examples of what that is. Next one, poorly defined compliance processes. So spreadsheets, complex systems, too many things. Poor understanding of how much effort really goes into compliance. And as I said, adding another task onto a manager or adding another task onto an employee often goes unnoticed as a combined entity. So if you go and do your day by day, how much time you spend on what, very rarely people do that. We do this as a shadowing exercise. And sometimes 50 to 70% of oversight specifically is all manual. And finally, little to no use of compliance data. So compliance data is not relevant. Whatever you collect is like either old or it's some kind of attestation that you did and somebody told you, pinky promise, nothing happened this month. And then 3 months later, you discovered that there was a problem there, but you don't have a track record of what really happened to actually understand kind of the root cause. So good compliance always relies on the quality of structured process, that you've got your checks, balances, and so on, and your culture. See something, say something. How to know if you've got good culture? Senior managing is encouraging transparency and not doing naming shaming, rather rewarding. People in your organization have a basic understanding of what it is and why you need it. People are not afraid to speak up. Really critical. Complaints are a voice of the customer, not whinging. People are proactively reporting and recording. And finally, most issues don't snowball. So by the time you discover a breach, it's not already a big serious thing that you need to go and report to the regulator. Very briefly, how we can help and what we do all of those. So we address the knowledge, the process, the culture. We have rolled out a library of AFSL obligations and specialized trainings for all staff, for specialists, and when it comes to specific laws and trying to understand, does it apply to me or not? Our processes are simple. A lot of it is automated and everything's in one place. And culture, by working with us, you're actually committing to full transparency. You can't even avoid it. And maybe that's a reason some people are scared of it. This is an example of an obligation register that we've combined and the library that we've got. We use plain English to describe the complex legalese language for you. We've scanned all the laws. We've mapped them all out to different AFSL obligations. And we've got the exact wordings and the links, so you can always go check. But main thing, it's simple. And in the end, at the end of this, we also have a library of breaches. So how do you know if something's a breach? It's not obvious. For probably 70% of obligations, I found it actually being quite counterintuitive. We have trained almost 900 insurance professionals in the last 2 years on simplicity, how to make complex things simple. So examples of trainings we've done, our most popular ones, Introduction to Compliance, is for all staff. The next one is understanding your regulatory obligations. We're actually going to run this with UAC next month. Introduction to risk management. That's more for those who have not done this before or have not lived this before. Part of CPS 230, obviously understanding CPS 230, broker code of practice, and we do a little bit of education for foreigners who want to understand what's happening in Australia. We have very, very simple processes. Here on the right-hand side, you see the real dashboard that shows you where you're at. Okay, it's a bad one because it shows everything's red, but it tells you the reasons why. It tells you what you're doing, what are your people doing, where your risk sitting, how well you're managing your breaches, how many do you have, are your people doing the right thing, and so on and so forth. It's very, very simple. And finally, as I said, we are very committed to see something, say something, and transparency. All right. I am done with the main body of our presentation. Do you have questions? If not, then please entertain me for one more poll, if that's okay. That's a fun one. We were speaking about the, insurance, compliance being your superpower. But if I ask you personally, based on your job, can you please just write one word that you associate with your superpower as a professional? Just one word. Or if you want one phrase. Consistency, leadership, service, knowledge. Very, very good words. Okay, engagement, knowledge, service. Very good. I hope this webinar resonated with you. I hope you found inspiration for your next compliance meeting and or other things. There are a few questions that came in. There's one. If you want, I'll address this one. Do you have an opinion of broken KPIs based on nil breaches and complaints? And do you have an example of a good compliance KPI? So I'm not sure I understand the question, but I'll try to respond. So nil complaints and breaches is a red flag in itself, and that has been reiterated multiple times by the IBCCC, and they are concerned for brokerages, especially those that are larger, who report nothing. So yeah, 0 is not good. Now, what is good? It depends on. Our data shows that at least one notification per person per month should be a bare minimum. People do notice. I mean, if you run the business, it's never smooth. And if you notice the irregularity, you should say so. And a KPI, usually the way how you would calculate a KPI, you would calculate roughly the number of policies you've got, the number of client interactions you've got, the type of client interactions, are they retail, wholesale? And somewhere in that sense, you can start identifying what your KPI should be. As I said, we've got the data on differences between those. But if you're just starting, you could start by just tracking what you've got and then saying, for every 1,000 policies, I've got X that and X that. I'm not sure if that answers the question. All right. On that note, thank you for attending. You'll get an email from us with a certificate. And if you need anything, just give us a shout. Thank you so much and have a great afternoon.